Good afternoon, everybody. This is Johnny Seville from Acorn Wealth, and we are less than 2 hours away until our Market Meltdown Smart Money webinar starts. It's going to be a very exciting afternoon, especially what's going on in the market today and over the last couple of weeks. So looking forward to seeing you in a couple of hours. If you haven't yet registered or you need the link again, it's simple. Just go to acornwealthcorp.com/event. Now, let's take a look at some of the things we're going to be talking about. Of course, the S&P 500, in our executive summary back on Thursday, March 9th, we mentioned that if the market was going to rally, it was likely going to be this point, and we may see the market bounce up and have a relief rally and a short covering rally through to the end of the open range of March. Now, open range was set on March 1st. You can see the high and low of this candle, which suggests that the market will be negative bias and should close below this range, which is 2400 and below, by the end of tomorrow. Of course, then open range resets on options expiration Friday, which is this week. So as we can see, we had this nice downward movement. We hit the moving average. We've rallied back up. Had a sharp rally today, and as you can see, we're now pushing in for the final day of that open range bias, being tomorrow. We can see that we're likely to maybe close somewhere in this range between 2380 and 2400, where we started from at the beginning of the month. So really interesting stuff. In last night's summary, we talked about being very cautious and protecting the money that you'd made in your trades over the last couple of weeks. One of the key reasons that we indicated that was that, again, we're very close to that high probability open range bias expiring, and but also one of the leading factors of being cautious was the fact that the high yield bonds had already reached their downward target. Now, high-yield bonds, of course, indicate when the risk on trade is happening, when smart money is liking risk in the U.S. corporate markets. And as you can see, there was, if we have just changed the color here, you can see that the high-yield bonds had a rising wedge pattern, right, which we had extended beneath that breakout point to give us a target of around $86, which is also where the 200-day moving average comes into place. So even when the market was going up, high-yield bonds have been going straight down over the last couple of weeks. Of course, this is going to be one of the things we're going to be teaching and talking about in tonight's workshop. And that basically says that there is a lot of cross currents in the market. When the markets are going up, but the high risk bonds are going down, that tells you that there's a bit of a divergence occurring. So that was very interesting. And after reaching that target, we had that sharp rally today on 19.65 million shares. So again, very interesting stuff, but an oscillating bounce. And what we know about oscillating moves is they can rally very sharply, but also reverse very sharply. Again, coming into the end of this week, which is a very critical turning point or juncture for the global markets, especially the US. Now, we'll also look at the stocks above or below their 50-day moving average. You can see that also had a pop today, again off of that support level, and we went up 12.41%, so we are up to 52% of stocks roughly above their 50-day moving average that are in the S&P 500. So again, we're starting to see a bit of bullish activity there as well. Now, so what that tells us is, as we indicated in last night's summary, we really don't want to be doing much at all in the way of heavy trades. We'd indicated that the end of this week was more about capturing profit, locking in profit, putting your stop losses in place to protect capital and profits that have been made. And as you can see, that would have paid off well for you today with that reversal that we've had. So now we go into looking at what the smart money indicators are saying next, and we'll be reviewing that in depth tonight, and taking a look at how we read into these smart money indicators going into the end of the week. Now, taking a look at some of the interesting things across the market, gold also had a very good rally today. Now, let's go into gold. So gold rallied strongly over the US dollar drop. dropping against the Canadian dollar today. Gold went up nicely. You can see it again, an oscillating bounce. Over these last few days, it was looking quite bearish. Then you get this kind of very straight up charge, which again is oscillating versus momentum. So we want to be wary of that. It's not something I would be running straight into. Normally with a nice change in movement, which is going to sustain, like you can see back in December, it's a gradual turn. We just gradually get back over the moving averages and climb them steadily. A sharp oscillating bounce, not always, but is often followed by a reversal back the other way. And of course, we're heading straight into that moving average. So another thing to be cautious of. But this brings me to talk about one of the recent setups. Now, Freeport-McMoran, of course, was one of the shorts we alerted you to as it created this head and shoulders pattern up around $16. And we talked about that being a profit-taking target around $12, $12.53. The reason why we'd suggested that, of course, is that a head and shoulders pattern should create a right shoulder. And so even though the momentum had looked strong, it was better to look at potentially taking profit there and waiting for it to see if it's actually going to break down or do what it should and go up. So today it obviously did go up. We went up on 24 million shares, rallied 5.05%. So that's going to be something interesting we're going to talk about tonight as well. But again, you can see the pattern obeying its rules so far. And if we can get above $13 in this moving average, it should certainly be able to create a right shoulder, which would then be another excellent potential shorting opportunity. Of course, last night's flag alert we sent out had a nice little bump up today. You can see it rallied up from a low of 12.50 and change up to a high of 13.20. So that flag setup is looking interesting. Of course, that was one of the long alerts in last night's executive summary. And RIGL also doing really well today, having another push up. Needs to obviously break the high of this candle, but we had a nice push up of 7.46% on Monday on 1.42 million. Only pulled back yesterday on half the volume, 724,000, and then pushed up again today on 1.44 million. So RIGL is looking strong in that flag setup, and again, if we can crack through that overhead resistance, we should very likely hit that target of around 320. REG also hit its profit taker stop criteria after its breakdown alert up here around $70. You can see it went down, hit that first target easily of 65, went lower close to our 61.30 target, and we talked about considering taking some profit down there. In last night's summary again, we said, look, if it breaks through this 9-day moving average, certainly would be a time to consider just exiting the rest or an exit signal there. So depending on what you did, there was a nice opportunity to clinch some profits if you were in anywhere near that breakdown. DPLO also continued a nice upward movement today. Again, we're waiting for this to break this 16.16 resistance, but as you can see, it's starting to move up nicely, and if we can break through that, we've got a nice potential gap fill all the way up to $22. So keep your eye on that one. Two new ones I want to make you aware of that have been on my watch list for a while. Penn National Gaming. This one is if you excuse all of the trend lines over here, this was previously in a downward channel, as you can see by this line and this line, previous downward channel. It then shifted its formation right around here when we broke down, broke the trend line here in September 21st, and then broke it more substantially here in November. Now, we talked about this in our one of our patterns and probabilities lessons recently, that what we therefore probably have, if we flip this upside down, as you can see, is a head and shoulders, or therefore, if we flip it back the right way up, an inverted head and shoulders. So this one, we're waiting for a confirmation on this one. If it is able to break through 1550, then this could have a nice run up to up around 1727. So there's a nice potential move there, and I'd be looking at about a $14, a $14.74 stop criteria. So that gives it some room to move, room to sit on this this support line, which is a secondary support line. We've kind of got two mixed in with each other. As you can see, both are valid and both are in place on two different gradients. So if we get a break through that 1550 area, or even a little bit lower, but 1550 certainly should be confirmation, then we've got a good rally potential there. And a quick look at the smart money indicator. Again, we'll be looking at this a lot tonight about smart money indicators and what they're doing. But as you can see, the smart money indicator is still charging up, showing smart money flowing into the stock. And on the short side, so because the market is again in unknown territory, we'll hedge and look at one long and one short. So Pacific Ethanol. Now these guys reported better than expected earnings recently. You can see it opened high, traded up to almost 950, and then just lost it all by the end of the day. So investors were quick to sell their profits on this one, and it's gone down, straight down ever since. Now, interestingly, the volume was big today. 314,000 shares yesterday, on 1.43 million shares trading today as we start to breach through this support. Now, this has been one on my short list for a while, and I just happened to look at it today in the scan, and as you can see, money flow is still dropping nicely. If this one is able to break below the break below 660, then this could be a potential drop to its first target of the 38.2% Fibonacci at 515. So look at say 517, and then my second target there would be looking at the 61.8 down at 415. So say 417, just to give a little bit margin on top of those targets. And as a stop criteria, I'd be looking at 723. Why 723, you might wonder? Well, basically looking at the hourly chart, you can see that we've got a nice little level of resistance up here at 740. But better still, if we lower that down, you can see that that shelf of support we bounced there, and also from beneath we gapped down and bounced underneath that for a while. So you can see that the 20-hour moving average and the 50-hour moving average both coming down on top of that. So for the interest of a good risk reward, I'd be looking at say around 723 or 727 as a stop criteria there. So there you have it, folks. Now, so again, we're an hour and 46 minutes away, so we'll look forward to seeing you all tonight. And if you have any questions or anything that's burning in your mind that you want to ask, come bring them along with you, because we will have an extensive Q&A period at the end where we break down what's going on so you can walk away with something really valuable in hand. So again, acornwealthcorp.com/event. See you tonight. Take care.